Folks, over the last couple of weeks, you have heard me say repeatedly that the consumer is broken. The consumer is scared. The consumer is reacting. They react when they don't know what's going on. Now we are seeing numbers and how bad the reactions were. Different reports from different magazines or different articles, but I will use this. Roughly speaking, there's been $120 billion in a 10-day period that has come out of the regional banking system and gone elsewhere. I'm going to be talking to Taylor from Life Goal Investments because it appears that about 2/3, or we'll call it $70 billion that ended up in the big banks. Makes sense. That's rational. But Taylor, where'd the other $40 billion go? Where is it? I don't know. It's crazy.
I think it went into coffee cans and mattresses at home. I'm not joking when I say that. Like, it sounds crazy, but I think people just fear the bank run and there's hysteria there. And they're like, listen, I know the moron is the last one left. I'm not going to be the last one left. And I don't know where to take it. I'm not sure whether to trust big banks, small banks, my regional person, not. I'm just taking it, and I'm going to take it home and put it right in a coffee can, and no one's going to touch it.
Yeah, it's really funny because I actually asked my audience in one of my daily financial news videos. Shout out to everybody that watches that. Thank you so much. What did you do anything different? Right? Did this cause you to do anything?
Oh, yeah. So I will say no. I have not done anything different. But keep going. Sorry.
So a couple of people, admitted that they had bank accounts over 250, so they fixed that problem. And if you are that person, fix that problem. Right.
Yep. Easy fix for an individual, not an easy fix for a corporation. No. We can touch on that, but for an individual, it's an easy fix.
Yep. Talking to people. Right. And then I'm like, okay, great. If you did that, awesome. But did anybody if you move bank accounts, that's one thing. But I want to know what I'm trying to figure out where the $40 billion went.
Right.
So some people said they bought money markets because that's out of the system. Makes sense.
Yep.
Some people bought treasuries. Some people bought laddered CDs.
Yep.
Some people bought gold. And some people bought Bitcoin.
Yep.
All of this money coming out of the banks is going to make that savings rate that people have been talking about ad nauseum look extremely low.
Yep.
Right?
And so look at this though, too. This is not the first time this is playing out. So this was actually an exacerbated story over the past 10 days, but this has been playing out. Why? Because people look at their statement, they go, I'm getting 0.1% at a brick and mortar bank. I can take this into a money market and get 4%. I'm not an idiot. I know that those are essentially risk-free assets as well. Why not take it there and house it there instead?
Yeah. And this is why what we're going through is akin to the savings and loan crisis.
Correct.
Again, folks, it's not the Great Recession. Do yourself some research. Pull out Wikipedia or Investopedia or whatever it is. Go look at the S&L crisis. Rates went up. People couldn't get it in a bank. They moved it out. Banks had a problem. We lost 1,000 S&Ls. Oh, by the way, if you're in real estate, commercial lending is going to collapse. It's going to be a problem, especially office. How did savings and loan crash or get resolved? RTC, Resolution Trust Corporation. Sam Zell, the original grave dancer, bought a lot of crap from RTC. That's what made him a billionaire. This is all going the same direction. And again, this is not a moment. This is quarters and years coming. But yeah, it was wild to see the money move.
Cracks are forming. So my solution to this problem, and we discussed it a little bit on the last week, but my solution to this is listen, you need to step in as the FDIC and the government at large and say, we are going to guarantee all deposits. And I'll let you dispute this if you don't agree with it. And I'll give you my solution here in a second. You need to step in and say all deposits are secure. And my solution to how this does not get charged back to the taxpayer, which it currently is in our current framework, because they're going to step in and save these things and it's going to be taxes that end up paying for it, is take those that have over $250,000 worth of deposits and charge them a self-insurance fee. Yeah. Essentially, the higher above 250, the higher the fee goes. But the other important thing is they must, and I put this out in the video the other day, they must enforce all banks to charge this. And the reason you can't have it just be, whomever wants to charge it can charge it and not, is because JP Morgan's not going to charge it. And they're going to continue to steal customers from that regional bank. Why? Because JP Morgan knows damn well that the government is going to bail them out and backstop them if they were to fail because they're too big to fail. Whereas that regional bank with 25 branches, they don't have that same comfort level.
Yeah. Yeah. I think there's, I actually think the solution's similar to that. I think we talked about this. Like, my answer is the fact that companies and individuals are treated the same is idiotic. It's a failure of basic logic.
Totally
What
agree.
you should do is you should create some number for business accounts. I have several LLCs. I have business accounts. I actually have to check a box, business
Yep.
or individual.
Yep.
If I'm in a business account, there should be different fee structures because I have different services, different,
Yep.
Whatever. And the FDIC limit should be bigger.
Yep. Yep.
I don't know if it's 2.5 or 25 million or whatever you want it to be.
The whole idiotic thing of people saying like, oh, I don't care about rich people losing their money in a bank. Like, guys, that's a stupid thought process. And I hate to say it, but like my sister's a really prime example. Her company, she didn't know this. She didn't sign up for this when she, decided to be hired by her employer. Her employer did their banking through SVB. My sister had a delayed paycheck. She's not some uber wealthy person. She had a delayed paycheck. Is it her fault that her company decided to go with SVB? Is it the company's fault? Are they supposed to do due diligence on the back end of what the bond portfolio of this bank looks like? Like, people don't have the ability to do that. When you deposit money in a bank, you have to know it's going to be there.
Yeah, no, I totally agree. I think we need to understand that business accounts and individual accounts are different. The fact that they operate under the same rules it's idiotic.
Yep.
And again, if you split those up by those accounts, the individual doesn't get the extra fees. The bank, the companies can pay the fees.
That's the thing. So I put this out on Instagram and people wrote back like, why would I pay to have my money deposited? I'm like, well, first of all, you're likely not above that 250. So you're going to be paying for the insurance on those accounts, guys. Like, why don't we just self-insure those large accounts?
Yeah.
And then they go, hey, well, is it too much work for them to split up their accounts to 250? I'm like, guys, yes, it is. If you have $10 million, which is, peanuts for some of these companies, $10 million, bankroll that you do paychecks with, that's 40 different banking relationships and accounts.
Impossible.
Like, that's an absurd thought.
No, again, get a business account, have a different limit, make it 2.5 shit, make it 20. I don't care. Make it 250, whatever you want it to be, but just have the scale, pay for the insurance. We're good to go. But again,
totally agree.
The point of this is I am shocked at how fast the money moved. And the fact I honestly didn't expect 30, like, think about it, right? You're holding a cup and 30% of the water fell out. It's in bank. Yeah. It's under mattresses and coffee cans.
And in case you're wondering, like, this is stating the obvious. That's not good for regional banks. Like, we're trying to fix this situation.
Dude, it's not good for the economy.
It's not good.
If you are so scared that you are taking your $8,000 out of the bank and storing it in a sock in your sock drawer, I'm going to guess you're not spending a lot of money.
Yeah, you're darn right. You're darn right. If that's your thought process, that is going back to you, back to the home, put it beneath the floorboard, and that's not moving.
That is not moving, folks. The consumer broke 2 weeks ago. We brought it to you here first. We are going to have a recession, as we talked in the previous video. Even the Fed says one's coming. I'm shocked that nobody else is reporting this. Taylor, you do an amazing job. Where can people follow you?
Yeah, thanks so much, Michael. Yeah, follow us on Instagram and on TikTok. We do different things in different places. We're at Life Goal Investments.
Thank you, buddy.